market has been in a topsy-turvy dynamic for months now. It's just absolutely fascinating to see what's been happening in the markets and with different companies, especially as the economy has been struggling to get by, to recover. We're seeing some stops and some starts in different areas. We've got some fascinating news about Kodak being brought in to help produce pharmaceuticals in America with a federal government contract, which seems to be a little out of the ordinary for Kodak. The SEC is looking into this, Securities and Exchange Commission. Meanwhile, you have mergers and acquisitions that are ongoing. So many different things to talk about. And that's why I am pleased to do so with Crista Huff, who rejoins us on the program. She is founder and equity portfolio manager at the hedge fund Freedom Investment Partners, LP. And Crista joins us now here on Jimmy at the Crossroads. Crista, welcome to the show. First time with the full title.
Thanks, Jimmy. Yeah, I'm so happy to finally be there,
Well, congratulations. I know you've been working years on turning this dream into reality, and you're already rocking and rolling, as we will talk about in a little bit. But I want to start with the broad question, then we're going to narrow in on some specific stories. I'm just wondering where you're seeing the stock market and the economy at around right now. Because last time we had you on several weeks ago, you were the bearish I could ever recall Crista Huff being in years of interviewing you.
I have been extremely bearish on the economy. And I don't know if I spoke to you after the March market drop, but I had anticipated the drop. I bought low with my new fund. My new fund then performed really well since I did buy low. And one of my one account that I manage is up over 50% from the March lows. So despite me being bearish about the economy, the stock market is its own animal, and I have to take my cues from the market as to what's going to happen next. So basically, we've been seeing the stock market roaring back up toward the highs from earlier this year, and the NASDAQ actually is much higher than previous highs. So the market's bullish.
Yeah, what's an important point that you raised is that there's a difference, there's a separation between how the economy is doing and how the market's doing. A lot of people look at the stock market and say, oh, it's up or it's down. That must mean that the economy is struggling, which is far from the case.
Right. The two of them don't move in sync, which is probably one of the reasons that people make perhaps bad investment decisions, because they're expecting if they like the president, the market should go up, or if unemployment is terrible, then the market should go down, et cetera. And no, they're not necessarily in sync, but there are specific sectors or industries that are very, very much affected by the economy. So for example, I have a bearish bet on airlines, because for many reasons regarding both the lockdown and people's fear of going back in public in the ensuing months, I expect the airline industry to suffer greatly. So that's one of the few bearish positions I have in my portfolio right now.
So let's talk about a few different stories that have been notable in terms of the news of late. Kodak, this is interesting. There's a massive government contract of, I think, nearly $800 million. Federal government bringing in Kodak to manufacture some prescription drugs in order to help address, I think, to address the COVID-19 crisis that we're facing right now with the ongoing coronavirus pandemic. But now the Securities and Exchange Commission has apparently taken a little bit of an interest in this deal, perhaps because it seems unusual. I mean, I don't think of Kodak as being in pharmaceuticals and dealing with drugs and so forth. What have you seen about this story?
Okay, so the government loaned $765 million to Kodak so that Kodak could produce pharmaceuticals. If Kodak is capable of producing those, then sure, get a loan, produce it, make money, and pay back the loan. To me, there's nothing unusual there. But of course, somebody somewhere, probably a political opponent in Washington, D.C., raised a red flag and said, hey, is this legitimate? So the Securities and Exchange Commission steps in to examine it to make sure it's legitimate. And frankly, Kodak's been around forever. All the folks who are running the company have their jobs on the line if they do anything scurrilous. So I'm sure that they had all their I's dotted and their T's crossed. So the Securities Exchange Commission will examine to make sure the loan was above board. Kodak will proceed to produce pharmaceuticals as they have, essentially promised in whatever contract they made with the government. And then the next issue that happened was somebody said, well, hey, the executive chairman got stock options recently. That can't be legitimate either. Well, why can't it be legitimate? The guy has been there for about 7 years. He received stock options and stock as part of his compensation. He has literally never sold a share. Not only has he not sold a share, but he has spent more of his own money. He spent every dime that he earned as executive chairman, plus more of his own money to buy Kodak shares because he believes in the company. So all of that sounds normal. If you or I had money to invest, we would buy shares of companies we believed in. So I know that the media tries to spin all this like it's real negative, but I don't see anything here where somebody broke any laws. Certainly, there hasn't been any information to that effect.
Yeah, though it is interesting when you see how the stock market reacts into how stock investors rather react to news like this kind of a deal, because the stock price did shoot up and then it noticeably declined afterwards. I mean, I know that Kodak isn't the kind of investment that you would necessarily make given your particular style, but any thoughts on the company?
The company's been suffering. They took a small loss in 2018, then they took a large loss in 2019. We know that, practically decades ago, their photography business crashed and burned. So I don't even know how they've been staying alive in recent years. I'm sure they're producing something, but this is a big opportunity for them to, restart the company, hire more people in Rochester, New York. So it's pretty cool for Kodak that they got this government loan. The share price had been tooling along below $3 a share. And then last Wednesday, it went as high as $60 a share. And that's just investors, actually gamblers, because, investors don't buy stocks that went up 1,000% in one day, but gamblers do. So basically, gamblers drove the share price up from $2 to $60 in one day, and right now it's trading around 15.
Once again, Crista Huff is our guest here on Jimmy at the Crossroads. She's portfolio manager at Freedom Investment Partners and for a long time has been a stock market analyst on various programs that I have hosted. So, Crista, let's talk about Marathon Petroleum. This is a company you are very familiar with, and they've made some interesting moves that have even brought in my favorite place to go to get coffee on a regular basis, Dunkin Donuts. Tell us what's going on there.
Okay, quick backstory. Last year, activist investor Paul Singer from Elliott Management got involved in talking to the board of directors and saying, hey, you need to change your business strategy because this company could be worth so much more. So the first thing Paul Singer did was he said, you need to fire the CEO. So Marathon fired the CEO. I was pretty shocked. But from what I hear inside the industry, the CEO was like an old business kind of guy and not a guy who was really going to examine the business and make it more valuable. So one of the longer term things that Paul Singer wanted them to do was to remove the Speedway retail stores, the gas stations, from Marathon, either spin it off or sell it. So it's been in the works for a year now. I've been following it closely. And finally, 7-Eleven's parent company, which is a Japanese company, they announced that they're going to spend $21 billion purchasing all of the Speedway stores. So last Thursday afternoon, Dunkin Donuts reported earnings, and they mentioned that they are closing all their stores that are in the Speedway stores. So there were 450 Dunkin Donuts within Speedway locations, and they were going to close all of them. And so right away I said, uh-oh, Marathon's about to sell Speedway. Marathon, I'm thinking, probably went to Dunkin Donuts and said, look, we'll pay you this money to close all those stores because the new buyer doesn't want the Dunkin Donuts stores in the Speedway locations. So I think I was messaging people about that on social media on Saturday, and then lo and behold, on Sunday, the announcement came that the 7-Eleven parent company is buying the Speedway stores without the Dunkin Donuts.
That is something I've got here from the Keurig, Dunkin' Donuts coffee. I couldn't resist not taking a sip since we're talking about Dunkin' Donuts. I'm sorry, repeat what you just said.
Yeah. Let's talk about our favorite flavor. I like the vanilla cream donut because I'm really big on icing. I love icing. And the vanilla cream not only has the white icing inside, but it has a big blob of white icing on the outside.
So in terms of donuts, favorite donut, I don't know. I mean, there are just so many. The chocolate
You don't
cream
have a
has been really
favorite?
striking me lately. I've
Okay.
always loved the Boston cream. That's a classic Jimmy Sengenberger donut choice to be sure. But one thing
Uh-huh.
that was so striking, going back to the stock,
Okay.
and the Marathon Petroleum situation, is I saw the news about 350 Speedway stores and then or 450 Speedway stores, and then
Right.
the rest that are from some other locations. About 8% of all of Dunkin' Donuts stores will be closing down. Those other ones are underperforming stores that are
Right.
closing down. But as far as the Speedway, I was scratching my head and I was wondering what's going on here. And then when I saw you post about Marathon Petroleum and this maneuver, I commented on your thread. I said, could this explain why Dunkin' Donuts and Speedway are parting ways here? And it appears pretty
Yeah.
darn clearly that that is the case, given the 7-Eleven connection in particular, where the parent company, the Japanese parent company of 7-Eleven, which who knew that they were owned by a Japanese company,
Right.
they're buying up all the Speedway stores.
Right. And I want to add this. I've been invested in Marathon for many years. I traded. I've been in and out of it several times, even this summer, because it has a sort of steady trading range. It's got a dividend yield over 6%. So I definitely own Marathon shares and I own Marathon call options. But additionally, when I was researching everything in the past few days, I was reading Dunkin' Donuts earnings report and I was looking at their balance sheet numbers. And I'm like, well, this looks pretty interesting because if you read the earnings report from last Thursday, they hired some new executives to go in some new marketing directions. They're cutting some of the fat from those stores that were underperforming. The profit situation looks good. And so I decided, you know what, they don't entirely fit my typical investment profile, but I decided to take a small position in Dunkin' Donuts because also I think the price chart looked relatively attractive. So I'm planning to make some short-term money in Dunkin' Donuts, but Marathon, I have a more solid belief that it's extremely undervalued.
Yeah. So in terms of the stock market and what you're seeing as far as the dynamics that are in play right now, Crista Huff, again, our guest
Yeah.
here on Jimmy at the Crossroads, what have you been noticing in terms of, say, companies that you're particularly following at Freedom Investment Partners, and how you've been performing and
Okay.
what you've seen in the market
Mhm.
that has presented opportunities?
Okay, so the fund is performing well. I only started on February 10th, which was like 9 days before the market began to fall and then crash. So you might say, oh my gosh, what a horrible time to start investing. But in January and February, I had been on your show saying, you know what, the market's overdue to fall.
Hmm.
So I had most of the money in cash, and then the market fell a tremendous amount. And then I started buying in mid-March. So my fund is at the end of June, it was ahead of the S&P 500 by about 13 or 14 percentage points in terms of total performance. So the fund is doing well. My favorite industry right now that's undervalued but has not only a value opportunity and dividend opportunities, but also merger and acquisition opportunities. That would be the investment management, life insurance, and annuity stocks. Again, I've been talking about these all year. They crashed a huge amount in March, and I think that was because the last time we had a similar market crash, American International Group, also known as AIG, they were very famous in that crash, and they were a life insurance company.
Hmm.
So I think a lot of investors said, "Oh no, we're having a market crash." The last time AIG was a big player, so let's get rid of our insurance stocks. Well, every time the market falls, it falls for a different reason. And insurance companies had nothing to do with the difficulty this time. So basically, you had all these incredibly attractive companies that were super cheap. So I just bought a lot of them. I still own 4 of them. And even today, a lot of them are up from excellent earnings reports.
Very interesting. Well, good luck. So far, so good. Crista
Thanks.
Huff joining us again, Freedom Investment Partners LP. And I want to do one more thing. So you'll recall the way when we would talk about earnings season on my old morning show in Denver,
Yeah.
Business for Breakfast, how we would go ahead and do that. Because I want to ask you a quick question about earnings season, which is upon us. And in order to do that, let's do it old school. And here's the intro.
Okay.
Be very quiet. That wacky wabbit and screwball duck are nearby.
Duck season. Wabbit season. Duck season. Wabbit season. Duck season. Wabbit season. Duck season. Wabbit season!
Aw, you have to help me, Mr. Federal Reserve Chairman. I don't know if it's duck season or wabbit season or tarantula season or what season it is, but it's definitely earnings season. Oh, you're deplorable.
So earnings season is upon us, I guess. It sounds sounds pretty wacky, but there you go. What should people look for in earnings season this go around?
Okay, what I always look for is first I go and look at the consensus earnings estimates for their current quarter. The estimates are all of Wall Street's predictions on what will happen, all averaged together into one number. So, for instance, I think Equitable, was it Equitable or Assurant? Okay, I had one that was supposed to report last night at $2.09 per share, and they came in at $2.76 per share. So you want to look at the consensus estimate versus the actual number on the earnings report. Don't even bother looking for news stories, just go straight to the press release at any company's investors relations site. Then you get the black and white numbers without any spin at all. And that's how you're going to know how your company is performing. And then if the company, you read more in the press release, if the company gives guidance towards how the next quarter is supposed to look, compare those numbers to the current consensus estimates. And if those numbers are higher, then your stock is probably going to be going up. So it's a good way to also figure out, should I buy the stock or not? Just read the earnings report and make a decision.
Thank you, Crista Huff. I do appreciate it, except for the fact that now I am craving a Dunkin Donut. My God.
Donuts.
Maybe I've had too many. In the past week with my birthday and everything, I have just had too many. Thank you so much for joining us as always. We appreciate you breaking things down. Thank you.
Perfect.
Once again, Crista Huff joining us, founder and equity portfolio manager at Freedom Investment Partners LP, joining us here on Jimmy at the Crossroads. Thanks for watching this clip from Jimmy at the Crossroads. You do not want to miss a minute of engaging, intelligent talk. Subscribe today to the Jimmy at the Crossroads YouTube channel, and you'll be sure to catch our live broadcast. I appreciate your support.
I got Jimmy at the crossroads, making sense out of no sense. Yeah.